Well, the markets have nosedived with the Sensex and the Nifty trading in the red on the back of negative global cues. Joining me right now is Aisha. Aisha, it's not looking good at all, is it?
Oh, it's not. But, I'll tell you what, Nupur, it's really not coming as a surprise. Look at the kind of global setting that we woke up to. It's been a meltdown of sorts across the globe. The US equities crashed in excess of 3% across the boards. That's the Dow, the Nasdaq, as well as the S&P 500. This morning, Asia was, short of a disaster of sorts, spooking global equities across the globe. China, by the way, Nupur, has tumbled 8.5%. You've got Hong Kong, which is down 4.5%. Ditto is the case with markets like Taipei as well as the other peripheral markets across the Asian indices. So a global meltdown of sorts. Not just that. What happened over the weekend also has a factor to play with regards to why you're seeing the global markets span the way they are right now. The NYMEX crude, that's cracked below the $40 to a barrel mark as well. So that really is sort of, bringing up concerns and raising questions in everyone's mind as to why the kind of consistent fall in commodity prices. Is the globe really going through a growth slowdown, and is China going to trigger it all? In the past, we've had many experts come out and raise the questions on whether or not there's going to be another global recession which is awaiting us in the pipeline, and can it be triggered by China this time around, like was the case from the US just a few years back. So having said that, it was a gap down start that Indian equities saw to themselves. We've broken below the 8,000 mark in today's trading session as well. We're sitting at fresh two-year lows when it comes to the rupee as well. Having said that, there was the RBI Governor Raghuram Rajan who assured markets that, wait on, we're going to do whatever it takes to really stabilize the equity markets. Now, why is the rupee movement so important to equity markets? Remember, Indian equity markets have a large foreign institutional investor participation. So having said that, they monitor their returns in dollar terms. So that's very important to monitor as to how the Indian equities, or rather Indian currency, actually pans out. We've already seen the Indian rupee plunge sharply to that 66 mark. So yes, there was Raghuram Rajan soothing investor nerves that don't worry, we're going to come in and curb the volatility in the Indian currency.
7 years after the financial crisis, advanced economies are still growing fairly slowly, while a number of emerging markets are experiencing difficulties with their old export-led growth model. Now, many of you are watching markets this morning worried about the continued volatility from last week. While I don't want to opine on the future direction of markets, I will say that relative to other countries, India is in a good position, with strengthening growth, a low current account deficit, a narrowing fiscal deficit, moderating inflation, low short-term foreign currency liabilities, and very sizable exchange reserves relative to imports or liabilities. Let me emphasize that we have $355 billion plus another $25 billion in forward purchases that are not required until next year to meet foreign currency FCNR liabilities. So we have approximately $380 billion in reserves to be used as and when the need arises. We will have no hesitation in using our reserves when appropriate to reduce volatility in the rupee.